Hi everyone, Donnie Schultz and Brace Home Loans here with markets on Monday, a little bit after 11 a.m. Monday, May 9th, coming off of Federal Reserve announcement last week where they increased the federal funds rate by 0.5%. Markets were anticipating it. A lot of headlines before that announcement saying lock in your mortgage rates. I can't iterate enough that the federal funds rate does not have a direct impact on longer term rates like 30-year fixed rate mortgages. Now, when that announcement was made on Wednesday, we actually saw rates pull back by 1/8. We took advantage of some locks at that point on better pricing than we had seen all week. And the reason that we took a lot of locks off the table is just because of the volatility that we have been seeing over the last 3 months, the trend for rates to continue to increase. And Thursday into Friday, we saw rates deteriorate and 30-year mortgages hit the highest levels that we have seen since 2005. Average 30-year fixed rate going into this morning was probably about 5.5%. We're right in that range where we would be looking for a potential ceiling on these rates. We're talking 5.5% to 6%. There's definitely some possibilities that rates continue to move higher. It's possible that rates continue to move higher than 6% at this point. But we're very close to a point where we would say, hey, rates have gotten to a level where we would start looking for those signs that a ceiling has been reached, and the narrative will shift here at some point to how high can rates go to how long will rates stay at these elevated levels. It will take time for rates to move back lower. Economic data is going to become even more important than ever. We're going to be keeping close eyes on the weekly reports that are coming out. So if we look at this week, there's a couple of key data dates. We have inflation data coming out Wednesday morning. All eyes will be on that inflation data. We're going to see it. We will need to see a couple of months in a row of inflation leveling off and starting to come back lower before we see rates start to drive down significantly. It's going to take time. So we're keeping an eye on Wednesday. Wednesday could move the markets either way. If inflation data comes out at expectations are lower, we would expect rates to level off, perhaps pull back a little bit. There's a lot of room right now for rates to pull back 1/8, 1/4%. Buyers should be looking to take those opportunities off the table. We'll probably see a reprice today for better pricing on interest rates. That could continue into inflation. Question will be, how much risk do buyers who are in contract want to take, because that data is released early in the morning before rate sheets come out. So, it is a gamble. It's a roll of the dice. We want to make sure our buyers are aware of that. The float downs are super important, right? All our buyers who are locked in, if we do see a ceiling, we see a pullback, rates drop at least 1/4%, we'll be able to lower their rates. And then the program that we're really pushing now for our buyers, because it's important for them to get into these properties and get into these contracts in case we see rates push from 5.5 to 6 or perhaps even a little bit higher than that. We want to get these offers accepted. We want to be in a position to lock in before the markets continue to move to those higher levels, those potential ceiling levels. So we're really pushing all of our buyers into our Approved to Move Plus program. Anybody who's not familiar with that, I'm going to blast out another email probably midweek with a link to an overview on that. It's a full credit approval, and at offer, we'll take a property and guarantee a valuation on that property. We try to hit the offer price. So if your buyers are submitting an offer at $700,000, we're going to try to guarantee that $700,000 value. If we can't, we're going to tell you what number we can, whether it's 675, 680, 690, and that's going to allow us to have a conversation with those buyers and put a plan in place where they're comfortable. They know what their risk is going in and waiving an appraisal, or at least giving some type of flexibility on that appraisal. It's a great program. There's no cost. It takes us 24 hours to credit underwrite a file. It takes us an hour to give a value guarantee, so we're going to get those answers back within an hour of submission. Keep an eye out for that video. Definitely watch it. Program's a home run. As prices continue to move higher, as rates continue to move higher, and buyers are more conscious of monthly payments and on the offers they're making, we're expecting these offers to compress, right? So we're still going to have the buyers. We're still going to have multiple offers. Are we going to see buyers going 70, 80, $100,000 over list. I think that's going to become more and more rare, just again because buyers are so conscious about what these rates are doing and how these rates are impacting their monthly payments. So if we have 5 offers that are all within a $10,000, $20,000 range, but our buyers can go in and say, hey, we're guaranteeing the value, and we have a credit approval, home run, we're going to get that offer accepted 9 out of 10 times. If anybody has any questions, you can reach out to me and my team anytime. Have a great week. Talk to you guys soon. Appreciate everybody.